A warm welcome to you, my dear children. Welcome back to Business and Accounting Studies. Once again, with a new session and a new lesson. This time, we are starting our session with Unit 6 in your syllabus. Unit 6, a new lesson, that is dual impact of transactions. Something new, isn't it? Yes, it's something new. But we are going to learn most probably the most important rule or the principles of double entry. We are going to learn most probably the most important or the most fundamental, vital, basic rule in bookkeeping and accounting. In this lesson, you're going to learn the dual impact of transactions and the double entry system. Right, so important lesson, right? Yeah, for sure, yeah. So it's unit number 6. Unit number 6, children. Dual impact of transactions. Dual impact of transactions. The cover page of your textbook, which shows accountants, right? Working with their accounting records. Yeah. Let's see what do we have under this topic. A simple breakdown of the subtopics. Introduction to the dual impact of business transactions. Introduction to the dual impacts of business transactions. Well, some of you are children who did not watch our previous sessions must be wondering what is the dual impact of transactions. But you who watched the previous sessions, who got together with me along the way, you know very well what dual impact means, don't you? You know, children, we learned about dual impacts of transactions and we recorded the dual impacts of transactions under the dual impact which the transactions make were recorded under the accounting equation. That's right, under the accounting equation. How a transaction, after a transaction happens, how that transaction affect to increase assets or to decrease assets. At the same time, how the transaction increases liabilities or decreases liabilities. Yeah, we learned. Or maybe the transaction decreases assets and decreases capital. Maybe that is the effect. Or increases assets and increases capital. It was all about an increasing and decreasing, or increasing and increasing, or decreasing and decreasing the change which the transactions make to the assets, liabilities, and capital. For you, I'll say it once again. The changes that the transactions make on assets, liabilities, and capital of the accounting equation. That's what we learned in the previous session, and we recorded those effects with amounts under the accounting equation. I'm happy that you remember, children. Good that you remember. So again, we take a look at the dual impacts of business transactions and something new right here. Double entry system. A few seconds ago I told you what you're going to learn in this lesson, what you're going to learn. And I told you that this might be probably the most important principle or rule in bookkeeping that you are going to use for the entire lives, for your entire lives. If you get involved in a profession related to business and accounting. If you get involved in a job in accounting, you're going to use this for the rest of your life. Okay, better learn it properly. And then we are going to learn about an account, what accounts are, types of accounts, finally, recording transactions in accounts. All right. So, you probably learn about accounting and real accounts. You're going to learn in this lesson. If you haven't done any accounting exercises or in any type of an accounting work previously, probably this is the first time you're gonna do some real accounts, right? So in this lesson, a lot of things. We'll make it fun. Moving on, you have a figure, you have a character on the screen. This character looks like a old father of a church, right? Children, who is this? Who is this person? I'm giving you a very brief introduction to accounting to start the lesson. Children, this is Father Luca Pacioli. This is Father Luca Pacioli. Why am I taking him on screen today? It's he who invented accounting. It's Father Luca Pacioli who invented accounting, who introduced the system, the double entry system, which you are going to learn today. He introduced to the world the double entry system. So obviously you must have at least a knowledge, a brief understanding about who and how this system came into the world. This is how. In 1494, so this is a very ancient art, right? In 1494, this Italian mathematician Father Luca Pacioli introduced the double entry accounting bookkeeping system to the world, the double entry system. So Here, I'm introducing to you Father Luca Pacioli, who is the inventor, who is considered as the inventor of accounting. Right. That's why we say he's the father of accounting. Let's see what he introduced to the world and what we are going to use in accounting and what this double entry system is. What's the dual impact of transactions? What's dual impact of transactions? Children, we have already learned about this. No doubt about that. The dual impact of transactions. If I ask you, what is the dual impact of transactions? What does it mean? You tell me. No? Well, I heard somebody said that. What was that? That's right. Very good. The dual impact of transactions refers to, it means, every single transaction which occurs in a business has an impact on two things of the accounting equation. Has an impact on two things of the accounting equation. On two things. And we know that the accounting equation has assets, and assets are equal to capital or equity plus liabilities. Assets are equal to equity plus liabilities. The addition of equity and liabilities. That is the accounting equation. If transactions happen, well, not if, when transactions happen. When transactions happen in a business, every single transaction changes, increases or decreases two things of this accounting equation. Affects two things, two components. It can be an increase and a decrease. See, two. An increase and a decrease. Or it can be an increase and again increase. Increase. Or it can be a decrease and a decrease. Decrease. Whatever, either one. When a transaction happens, it affects two things. It has two impacts on the accounting equation. That is what the meaning of dual impact of transactions. All right? Well, we learned about this in the previous session, of course, children. Of course. Let's see how we did that. The recording of this dual impact. Recording of the dual impact under the accounting equation. Right. First of all, let's come up with a definition for dual impact. Come up with a definition for dual impact. Shall we? What's dual impact? When transactions occur, it has two. I'm going to write two with a special color because these two, the two effects is the base here. That is the factor which you should keep in mind. Every time, every transaction has two effects. Okay? So has 2. Which color are we going to use? Blue. All right. Has 2 effects. Has 2 effects. On the accounting equation. Right? How many effects? 2 effects. That is what we call the dual impact of transactions. Right? And just like we did in our previous sessions, we'll check how these transactions make the dual impact on the accounting equation. First transaction, let's go with this one. I'm going to write the accounting equation. Assets are equal to capital plus liabilities, right? That's right. Assets are equal to capital plus liabilities. Capital plus liabilities. Assets are equal to capital plus liabilities. And we'll check what this transaction is. Owner investing capital rupees 100. Owner is a separate person and the business is a separate entity. Right? Owner is a separate person. Let's consider me as the owner. I'm the owner now. All right. You are the business. Well, then let's say you are the accountant of the business. Okay. Is that good? That's how we think when we do accounting. When you do an accounting question for a business, you think of yourself as the accountant of the business, not as the owner. Because the owner is a separate person. And you are separate from the owner. That is me. I am the owner. You are different. You are a separate entity in the business. All right? Okay. So I invest capital rupees 100. I bring in my money to the business and invest that to the business. And you are in the business. How did we do this? Tell me. How did we do such a transaction? Yeah, we learned. As an increase and decrease. As an increase and decrease. So when the owner brings in money from his personal money and invests that money to the business, cash comes into the business. It is an asset to the business, of course. So assets, the business assets, which asset? Which asset? Cash asset. Good. Cash asset increases by 100. One impact is that cash asset increased. So this is the first impact. Now tell me the second impact. See, the second one still here. What increases or what decreases? Somebody said equity. Yes, very good. Cash asset increases. At the same time, equity increases by 100 because the money came from the owner. Anything belongs to the owner is equity. Anything brought or invested by the owner is equity. So what I write here is 100 plus under assets. That is cash. That is cash. Equals under capital 100 plus, that is equity. That's it. That's how you record the dual impact. Shall I put numbers? Just to make sure. This is the first impact, children. Under assets, first impact It is a increasing of assets. Then the second impact, an increasing of capital. That is the second impact. If you are having any doubt, if you were having any doubts, now should be cleared. The doubts should be cleared out now, because we recorded the double entry of this transaction. Owner investing capital rupees 100. And very simply, the first entry is increasing of an asset, that is increasing of cash. And the second entry is an increasing of capital. So the double entry or the dual impact is recorded now under the accounting equation. Okay, let's go to the second transaction, children. Second one. Here we go. Again, I'll write the accounting equation in a simple way. I'm not going to use colors now. Assets are equal to capital plus liabilities. Okay. Now let's find out what is the transaction is. Transaction is this: purchasing furniture for the use of the business, rupees 25. I have used simple numbers because there's no need to take big numbers. These are just examples, right? I want this from you. Somebody. You, Puta, yes. Can you tell me? Tell me what? Tell me the dual impact of this transaction. Tell me. Yes? Assets increase? Yeah, which asset increases? Which asset? Purchasing of furniture for the use of the business. Which asset increases? Furniture, that's right. Excellent thinking. Furniture. Thank you. Furniture increases by how much? 25, because 25 under assets increases because new furniture came into the business. New furniture came into the business. All right, we bought. Purchasing means buying. The business paid money, cash, and brought in new furniture for the use of the business. Furniture came in, this asset, the furniture asset, increased by 25. I'll write furniture here. Furniture increased. At the same time, what is the second effect? Now we recorded one entry, that is the first impact. Furniture increased. All right, it's recorded here. Furniture increased. First impact recorded. What is the second impact? What is decreasing? Or maybe something else is increasing. What is the second impact? This one. Decreasing or increasing or whatever. Somebody tell me. Capital increasing? Really? No. Capital does not increase because owner has not brought or invested anything. Does it say owner invested in furniture? No. No, children. The owner has not invested anything. Business has spent the business cash or money and brought in furniture to the business. Owner has not invested anything, so the owner's capital or equity is not affected. Furniture increased. What is the second impact? We spent cash. Cash went out of the business. Cash went out, children, because the cash we had is spent. That is an asset, and the cash asset went out. Cash outflow. So the cash asset decreases. Both entries should be under assets. Very good. Minus or decreasing 25, and that is what? Cash. It's cash. That is cash. Minus. All right. How many entries did we record? 2 entries did we record? Yes, 1 and 2. The dual impact is recorded. The double entry is done. Okay, children. Shall we move on? Well, you have another transaction. Why don't you tell me? The dual impact. Why don't you tell me the dual impact now? Somebody. Here's you. Tell me. I'll read out the transaction for you. You tell me the dual impact. Obtaining a bank loan, 500. Yeah, we are taking a loan from a bank. We are taking a loan from a bank. Okay. Cash comes into the business. Cash comes into the business. That's right. So the cash asset increases. Very good. Under assets, it should be plus 500 cash. Cash increasing 500 plus. Because cash comes into the business from the bank as a loan. And you know that loans are liabilities. You know that already. That means not capital. Under liabilities, there should be a change. Is it an increase or decrease, children? Liabilities. Under here, what should happen? Does the liabilities of the business, this is the first impact. Okay, this is already done. This is already done. Here, cash increased. Okay, this is the second impact. What is the second impact on liabilities? Does it decrease or does it increase? Increase. That's right. Increase. Why? Why? Yes, because it's a bank loan. Something that we did not have in the business. A liability which we did not have. Now we have taken or brought that liability into the business. A liability which we did not have earlier, we did not have a bank loan in the business, now we have a bank loan. So our liabilities of the business increased by 500. That should be written bank loan. The liabilities, it should be written bank loan plus 500. All right, children, no impact on No impact on capital, so we'll just leave it blank. Okay, the two effects. Do we have two effects? Of course we have two effects. We have cash increasing and assets. So assets increasing and liabilities increasing. Two effects. Dual impact and the double entry. First entry, second entry. Double entry. Children, what is the next transaction here? Payment of a rent. Payment of rent. Now it's simple, right? Now that we have the understanding, we'll just finish it in a minute, and not even a minute. We'll just finish it in seconds. Payment of rent, that means cash going out. We are paying cash for the building rent. Buildings are not coming to any business, not given to any business for free. Yes, we have to pay for renting the building. So we pay that rent. Cash going out, cash decreasing. 150 cash. What is the other effect, children? The second effect. Does capital decrease or increase? Does liabilities increase or decrease? The second effect. Yes, somebody said it. Yes. It is an expense. It is an expense. And expenses decrease capital. And assets, cash decreased. And the capital, equity decreased. Both effects are decreasing, decreases. So we'll record 150 equity decreasing. 150 equity decreasing. All right. The double entry is done. First entry, second entry. Payment of rent. Cash decreasing, equity decreasing. That's how we do it, children. Right, let's see what's next. Oh yeah, what does it say? How many transactions incur in a business on a normal day of trading? How many transactions? 10, 20, 50, 100, 150, 200, 500. How many transactions happens? Children, it's sometimes uncountable. Many transactions happen on a usual normal day. It depends on the business. Okay. If it is a large scale a business such as a supermarket, Cargills, Laughs. Well, there can be thousands of transactions happening on a day, on a normal day. One day, there can be thousands of transactions. It's true. And transactions doesn't mean the selling of goods which happens over the counter. When we say transactions, children, it doesn't mean customers buying the goods through the counter and paying cash to the counter. Not only those are considered as transactions. Transactions are varied. There are various transactions. Selling of goods is only one transaction. If this is the business, for an example, if I am the cashier of, let's say, Kiehl's, I greet the customer. Good morning, madam. Good morning, sir. And I get the goods. I scan the goods. Each and every good I scan, right? There's a barcode reader, and the barcode reader scans the barcode of the item, of the good. Yeah, and I put all the goods on a grocery bag, in a grocery bag. And the customer pays the bill, pays the amount, the total amount. I get the cash. I enter the amount in the cash till, the cash machine, right? I enter the amount and I put the cash into the cash till, take the balance, and I close the cash till. Give the customer the balance with the goods. Here you go, madam. Thank you very much. Well, that is a transaction in Kiehl's, a regular transaction in Kiehl's. Let's say the business is not Kiehl's, the business is a small retail shop, a grocery shop close to your house. Same thing happens. The Modalali gives you the goods, takes the cash or the amount from you. Yeah, that's what happens in a regular small, shop. You call them kade. Put the money in the drawer and give the balance back to you. That is a transaction of that business. But not only those are called transactions. Maybe some children think that transactions, when we say transactions, transactions are those things which happen with customers. No, not only those are called transactions. There can be various transactions. Even paying an electricity bill is a transaction. Even writing off or cutting off an irrecoverable amount from a debtor. Well, what was that? What did Sir say? What is that? Irrecoverable. It simply means, children, irrecoverable, cannot be recovered, an amount from a debtor. Even more clear, a customer who owes the business, who has to pay the business some money, if he doesn't pay, if that customer doesn't pay, if he dies, if he disappears, that money which we should get cannot be recovered. That irrecoverable money should be cut off, should be removed from the books. Even that is a transaction. All right? Goods or stock being expired, goods being damaged, it's a transaction. Removing a stock from the shop because the vegetables are rotten, or maybe the goods are damaged, or maybe the biscuits are expired. That is also a transaction. And regularly, the most common transactions are those ones which I mentioned. Transactions which happen with customers. But here we have very clearly divided transactions into two. And what these two types of transactions, the types of transactions, you know already. You already know. If I ask you, can you tell me what are the main two types of transactions? Yeah, cash transactions and cash transactions and cash transactions and check transactions. No, cash transactions and credit transactions. Credit. Credit transactions. Cash transactions and credit transactions. Cash transactions are those which happen in cash. I mean, when the cash is then and there paid or received. Cash transactions. Credit transactions means the cash or the value is then and there not paid. Or for the transaction amount is not given or paid then and there. But the transaction has happened. You have not paid, or the business has not paid, or the business has not received cash yet. Those are called credit transactions. Well, we learned in our previous sessions also. I have taught you, children. We have mentioned the two types of transactions. Okay, credit transactions are usually in our language. Credit transactions are usually known as Naya Ganude. So cash transactions, credit transactions. Naya Ganude. Yes. Keeping that in mind, we'll go and check how these transactions are recorded. Well, what is this? We should record transactions in accounts. All right. How cash transactions and credit transactions are recorded in accounts. That's what we are going to learn here. But let me write it like this. Recording transactions. Recording transactions in what? In accounts. Because we have learned to record the dual impact of transactions under the accounting equation. Okay, we have already learned. Now you already know how to record transactions. Dual impact of transactions, how to record under the accounting equation as an increase or decrease. Okay, or a decrease or decrease, or an increase and an increase. Whatever the impact is, a double entry must be recorded. That we did. A double entry. 1, 2. 1, 2. So what are we going to do now? Again, we have already done. recording transactions, recording the double entries. Children, now we are going to learn how to record transactions in accounts. That's what you're going to learn. All right. The reason for this is the accepted way of keeping records of transactions, children, is using accounts. Why is it the accepted way? Because of this. Because of this. How many transactions incur in a business on a normal day of trade? It's countless sometimes. So I'll write, can be countless. The number can be countless, thousands, sometimes even more than that. In that case, children, recording each and every transaction under the accounting equation in this manner is not practical. It's just not practical. That's why further we don't record transactions and double entries of transactions under the accounting equation. No more. You already know how to record transactions, the double entries. But now, to take one step forward, we are going to learn how to record transactions in accounts. Okay? That's what we are going to do right here. Read out. This is a page. This is from your textbook. The page is from your textbook. An account is a commonly accepted structure that is used to record the change, increase or decrease of asset, equity and liability. Commonly accepted structure, which is used to record changes of assets, equity and liabilities. Sometimes incomes and expenses. Changes for a time period. And the account, the format, the commonly accepted format or the structure is given here. Let's say this account is the building account of the business. Here you go. This is the commonly accepted format. So, with this new step in accounting, the new a system that you're going to learn. What system? Yeah, recording transactions. The double entries in accounts. With this, children, we are going to end this session, and the next session, in the next one, we are going to learn how to record the double entries of transactions in accounts. How to record the double entries of transactions in accounts. So, children, it's a short session. In accounting, in the coming lessons, we are going to do this type of short sessions. So it's easier for you all. I hope you will get together with me in the coming sessions too. And thank you for being with me. I'll see you soon.